A leader has to take the risks. Daniel, hi.
Mr. Doug, what's going on, my friend? How you doing? I'm doing
Good.
Fantastic. Doing
Great.
fantastic. Yes, sir. Actually, you know what? Change something real quick. All right, there we go. All right. So what's new, man? How's life treating you? Where are you located?
I'm in Southern California too. I'm in Santa Clarita, about 25 miles north of Los Angeles. And you're in
Okay.
Ontario, right?
I'm actually in Newport Beach now. So
Newport.
yeah.
Okay.
Yeah,
Great.
yeah. So
Okay.
have you did you grow up in California?
Now, I grew up in the Midwest and the Northwest, so we moved here. I moved here when I was 25. So, but
Okay.
this has been home for a long time now. So,
What was your main reason for moving to California from the Midwest?
well, these weather, it's from the Northwest. I don't know if you've spent any time up there, but a lot of people get what they call seasonal affect disorder, which basically a long-winded way of saying they don't like gray skies, and I turned out to like it. So I left the gray skies for here, and it's been great. So,
Well, I think Washington, Seattle, Washington, don't they have like the most suicides in the country or something like that because
it's very
of
high.
rain?
Yeah. It's rainy or cloudy, 200 and some days a year, 240, I think, days per year.
Unbelievable.
I
And
think
so
they say there's only 58 clear days a year in Seattle. Don't use them all at once. That's
I mean, that's just insane. I mean, it's just absolutely insane. And
Yeah.
so growing up, man, I mean, what was your childhood like? I mean, in the Midwest, I mean, did you live on a farm or something? I mean, what
We
would you
did
do
live on
out
a
there?
farm, sure. Yeah,
Did you
for
really?
12 years. We lived on a farm. Yeah.
Wow.
Yeah.
Wow.
And my dad was an engineer, so he leased the farmland out, but he would grow his own crops, and that was pretty cool. And then we moved to Indiana for a little bit, and then moved
Okay.
to the Northwest. I played high school football. I had some aspirations of playing college ball, and then I ended up getting sort of hurt in the last game and didn't play anymore. So I see you used to be a baseball player, huh?
I was a baseball player. Same thing happened to me. I thought I was going to continue. I mean, I did play 1 year of college, but I ended up getting hurt that first year. So
Oh, geez.
I was out of the game. And so I thought just a little community college. And so the only reason why I was going to college was to play baseball. That was it. So
Sure.
I had no aspirations of, and I actually never finished or anything. So I ended up
You've done
going
awfully well for yourself, sir. I've been reading, listening to your podcast, and boy, I've got impressed with the breadth of things that you've been covering here. So good on you. It's great.
Well, I appreciate it, man. Well,
Yeah.
today we're gonna have a nice little conversation, and
Great.
so how'd you get interested in economics, man? Like, where'd that all come from? I mean, from a farm to economics, what happened?
Yeah, I have my degree in economics. I got a bachelor's in it, but I didn't quite believe everything they were telling me. And so what I've done now, what I'm doing, in fact, I'm doing the page proofs for my book called Hypernomics. And then the subtitle is using hidden dimensions to solve unseen problems. And what I've discovered is that the world can be portrayed in, the markets can be best portrayed in 4 dimensions rather than 2. And it turns out the trick, such as it is, that these are mathematical dimensions, just like a ruler might be pointed east and west, but the ruler goes in the ruler direction. So turns out that you can use these opposing, realms, that wealth, I should say, value on one side. So products get more expensive as you get more of what you like. So more horsepower in an electric car, more range in an electric car, that creates more value. But as the price goes up, the number sold goes down. And so right there, those are four dimensions. So you have horsepower, range, price, and quantity. And it turns out that all markets outside of commodities work that way. And so that's what my book is about. And we put together a fund. We have a fund on it too that uses our software that we built. That's a patent for the software that we got, and we're doing twice as well as the S&P 500 over 3.5 years, and we get all of our stocks from the S&P 500. So
your algorithm, you're actually you've built a program that has an algorithm. Is it trading for you? Is it auto trading?
It's not auto trading yet. We might want to set it to auto trade, but right now we're still cross-checking the basic parameters of the algorithm. But 3.5 years in, it seems like it's doing pretty well. So yeah,
Doing well. Very
yeah,
nice. Very nice.
yeah.
Yeah, it's I think a lot of people are gonna, they're gonna watch they're gonna start to watch this podcast and or listen to it, and they're gonna say economics, and they're gonna say, I'm gonna fall asleep watching, listening and hearing about economics,
Sure,
And
right,
so, no, and I have a funny story about
right,
that because
right.
I actually, I mean, I love economics, by the way. I mean, I
Right,
love
yeah,
I love the whole history of money. I love the whole
yeah,
process of making money. I love
sure.
understanding economics. But I'll tell you a funny thing though, is if I can't sleep, okay, so I have this book and I forget the author's name now, and I should know it because I've listened to this book about 100 times. It's basically economics 101. It's like the basics of economics. But if I can't sleep at night, I literally will listen to the audiobook, the economics audiobook, and the guy will put me to sleep. So it's great. It's great. So today we're gonna spice it up a little bit, and we're gonna have fun talking about economics. I hope everybody stays with us on Wealth on the Beach podcast. I'm with the unbelievable, the incredible Doug. And I want to make sure I get this right. It's Howarth, right? Oh,
Howarth is how we like to pronounce it.
Howarth. Okay, I
Yeah,
just want to make
Howard
sure I
with a
get that right.
TH, yeah,
Perfect, perfect, perfect.
yeah.
And so, and I just, author, I mean, building a lot of amazing things right now. And I think, I want to start off with this one question because I think a lot of people that are watching, listening right now, they want to know, like, how do you define financial freedom? What's financial freedom and success? What does that mean to you? Because you've created an abundance in your life. You obviously multimillionaire, created successful companies, successful businesses. You've done really, really well. What does financial freedom and success mean to you? What does it mean?
Well, financial freedom means that you're not beholden to anybody for your bread and butter. You can just go off and do what you want to do by yourself anytime you want to do it. And to be clear, we're still driving towards that. I've been crafting this alternative basically to economics that we call hypernomics. Hyper meaning it exists in more than 3 dimensions, and so hypernomics is studying markets in 4 or more dimensions. And so what we've discovered is that you can create financial freedom for yourself if you can map out a place in a market, and the tools help you do that nobody else is competing in, so that you can give somebody something that they want, can afford, and don't have. And that's kind of the whole trick to this, is to find open spaces in the market that are within somebody's means to buy it, and then drive a product into that space. So it works for everything from an anthill down the street up to spaceships. In fact, so we have done work for Virgin Galactic and NASA in the past, and basically what it discovers is that when we look at what we call the demand side, there's a certain amount of products that anybody can stand in a certain market. So you've got Elon Musk launching satellites to space, and there's only so many launchers that can be built over the course of a year. So his launchers are getting cheaper and cheaper. And meanwhile, there's some launchers with Ariane and Boeing and Lockheed Martin that are up at the top of the market, and they form a demand curve, and the demand curve is moving over time. And then what's holding up the price of those launchers is how much they can carry up to space and how high they can go. And it turns out, so that ends up being, so how high they go, how much they can carry, and the price, and then the quantity. That's a 4-dimensional system. Well, turns out that Richard Feynman, the physicist, used to study in his spare time. He'd just go out there and he'd look at ants, and he was studying ants. And I found myself at the end of a trail after a run about 2 months ago, and I decided to look at a little ant down there, and I saw this ant, and he started going in a counterclockwise direction, and he made almost a complete circle, except he was a little bit wider out from the starting point than where he began. Then he did another little jagged, circle, and he was wider still, and then still another one. And I realized he was spiraling around, making an ever widening sphere. Well, that little guy I discovered was doing reconnaissance. So I raced home. I typed in ant reconnaissance into the internet, and I'll be good and doggone if these ants don't do recon the same way that you see these two little miles here. These are miles of markets. Ants do recon for their market being they want to be away from other ant hills, and they want a nice dry place that's got the right ceiling height and the right amount of food that's close by, just like you and I do. They want to have a house that's, in your case, close to the ocean. It's in a nice neighborhood. It's got nice schools. It's got a nice climate. And ants are doing the same thing that people do. So it turns out that this phenomena is ubiquitous. It solves for every market that we can find. And so the ants have a market for wherever they're going to live. They basically, they're doing real estate analysis. These ants are. And so I know you study real estate in depth. Turns out that this is the same thing that you do. They study it. I mean, this little guy is going around in a circle because he can't fly. He can't be on a drone and go around and look what's in the neighborhood. So he's creating a map from the ground level. He's like, oh, what's over here? What's over here? What's over here? He's going off into all these little corners, figuring out what's going on. He's basically communicating back to the group. Oh, over there is a big ant hill. Over here it's too wet. Over here it's too dry. Let's go over this way. And they keep doing that. And so they've actually tested, these scientists have tested, and they go a little A/B test to figure out what the ants like and they don't like. And they actually figured out how they can get ants to move into a certain location, which is kind of what we do, is we test for the same kind of phenomena. And, what is the best way to, what's the best kind of commercial real estate to put up, say, in a neighborhood, or what's the best way to populate the seating arrangement in a restaurant. So when COVID first hit, what here down in Southern California, you know this, Daniel, that they wouldn't let you eat inside in early 2020, and here in California, ladies and gentlemen, we get some nice weather, so you can eat outside, a little bit of heaters. And so we had our favorite little joint down the street, and they have a patio, and it was kind of small, so they were restricted on size. And people still wanted to go out. That was one of the few things you could do during COVID, was to go outside to eat. And they had this line going out the door. And I said to him, I knew the manager. I said, hey, Kayla, do you want to make some more money? She goes, well, sure, Doug. Why wouldn't I? She says, let me tell you what you have to do. So you got 3 tables of 6 and 3 tables of 4. Your average party size here is 1 or 2. So you've got these tables of 6 being taken up by people of 1 or 2, and you're just leaving all these people out the door. You need to take out the big tables, at least some of them, and put in tables of 2. And she did that, and their revenue shot up 25% in 2 months. And so this is all just pattern recognition. It's figuring out the patterns that are out there. So after I told her that, I went back and actually researched it and kind of had an intuitive idea. And it turns out in the United States that there is more than twice as many parties of 2 going to restaurants as there are parties of 4. And so there's a mathematical basis for that. So this is what we're trying to do, is to get the math basis to do the right analysis every time that you're in a situation where you have to make a decision between one thing or another. You want to figure out, where's the best opening for me to make a new product? Or conversely, if you're in the market, if you're overpriced, you're underpriced, it tells you what to do. So we use this to pick stocks. And so we pick stocks kind of in the manner that, you familiar with the movie or the book called Moneyball?
Yeah, oh yeah, absolutely.
Yeah. I mean, baseball used to play, so you probably were. So there's a line in the book and also in the movie where the Jonah Hill character is explaining to the Brad Pitt character that, the managers in baseball have the system all wrong. He says, they think in terms of buying players, but what you really want to do is buy wins. In order to buy wins, you got to get runs. In order to get runs, you got to get on base. Very nice logic tree, you know. Well, it turns out that in economics, you have to do, in hypernomics, you have to do much the same thing. In order to buy a stock that you think is going to go up, and this is what they did in the movie. So what Jonah Hill was suggesting to Brad Pitt is we're going to get these people that are underpriced. You know, so he gets a pitcher that's has a really funny delivery. It looks like he's throwing underhanded, and he's, you know, his fastball, such as it is, coming in at 80 miles an hour, but he gets people out. And so he was being penalized because he looks unconventional. So we go after the stocks in the S&P 500 that are kind of being penalized by people. So, you know, this company's been around for 50 years. They're not doing anything that's innovative. But you go off and you start to look at their financials and you go, geez, you know, their PE ratio is really low. Their earnings are high. They're undervalued. You know, so we go after people like companies like that. And it's the same thing in business, is that if you've got a product that's underpriced, you probably want to raise the price. And if you've got something that's overpriced, you probably need to drop the price. Another thing we did in the last couple of years is I was tracking this supersonic business jet that was being built by a company called Arion. Now, Arion was backed by a Bass brother from Fort Worth, Robert Bass. He's a billionaire. He's got all this oil money. He said, we're going to build this supersonic business jet. Now, in a past life, I used to work for Lockheed, and I would do cost analyses. And so he gave himself a certain amount of money to get the thing developed, and $4 billion, and did a little analysis. I go, it's pretty close. And he said, well, we're going to sell this thing for $120 million. You know, of course, that's part of what we do. We work out the value analysis. Yeah, it's worth that, maybe a little bit more. And then he said, we're going to sell 300 of these in 10 years, 500 overall. And then I went out and started looking. I said, you know, there was this thing called the demand frontier. Now, when you guys started, when they started, they got 20 orders. If you looked at the demand frontier, in the 10 years that preceded them, that when they started, that demand frontier would have supported 47 planes. And then 5 years later, the demand frontier would support 63 planes for a decade, for 10 years. And 5 years later, they still had the same 20 orders. So I said, well, I wrote on LinkedIn, I said, it's worth every penny, but there's not enough pennies in the world for you to get this thing sold in the quantities that you need to have sold. Same thing that happened to the Concorde 40 years earlier. And so I got an angry reply on LinkedIn from somebody who said, oh, we just got a big bunch of orders in. He failed to mention they were all options, all of them. And you're all wet, we're going to make it. And I go, well, good luck to you, but even with that, you're still well below your threshold, and you're not going to make it. And
right.
6 months later, they went bankrupt, and they stopped writing me. You know, so these phenomena are real.
the numbers are the numbers, and I think this is what a lot of people fail to realize in anything that they're trying to accomplish, is the numbers are the numbers.
Right.
And data ultimately, most of the time, it's going to win. I mean, the data, the numbers are the numbers, and you can't beat the numbers. You know, I talk to, of course, I run a sales organization of 1,500 agents, and
wow, yeah.
You know, I've told them for years. I've been running this thing since I'm 21 years old, and I was raised by some pretty smart dudes, and I always remember. I mean, it's just, you know, ingrained in my brain, and I just always remember them talking about the numbers can't beat you. You know. Because if you work the numbers correctly, they can't beat you. That just means that the numbers win. The numbers are going to win out every time.
Right.
And so you just got to play the law of large numbers. If you prospect 100 people a day, maybe you get a couple of them that decide to hook up with you. And but if you prospect 3 people a day, well, then maybe it's going to be a little bit of a difficult uphill battle for you. So you got
Sure,
to get
right.
to the point where you understand. And I used to always tell my teams that, on Sunday night when we were booking out our week, I
Hmm.
would tell them Sunday nights, just make sure you're booked with 10 appointments on Sunday night. If you have 10 appointments, you'll write at least 3 sales, by the end of the week. So if you wrote 3 sales a week, you're talking 12 sales a month. This is about 10,000 in income. So
Hmm.
if you just stay consistent, at least you'll start to build a little business just by yourself, right? That's
Sure.
not counting if you go actually build a team and build an agency and start growing and then if you duplicate that behavior
Hmm.
with the thinking that says, okay, I'm just going to make sure I have 10 appointments, 10 appointments. 10. Don't worry about what you're going to sell. Don't just worry about the activity, the law of large numbers. The activity is going to create the ultimate outcome, which is the sales. And if you just, keep duplicating that, and of course, if you're recruiting and training and developing other people, duplicating that process, eventually, this thing is going to start to kind of spider web on its own, and then you'll end up opening up locations and building a team and ultimately getting to a place where you have so much passive income that you're free. And that was
Sure,
the whole
right.
point of all of it, but I really relate to what you're saying because, some people in their mind, they think, oh my God, I could do this. This is, because our dreams are so big. And I always tell people dream bigger and all this is great.
Hmm.
Dream bigger though, but make sure you know your numbers.
Oh, sure, right,
Understand that,
right,
economics and numbers are going to win out every time. So, but if you got those things right,
right.
then we're on to something, right?
Oh, absolutely, yeah. And the point is that there's a variety of ways that you can, mess your business up without understanding the numbers. So I gave an example where somebody, overestimated demand. Now, there's another example, also in aerospace, since I come from it.
Mm-hmm.
Another billionaire, a guy named Vern Rayburn from Seattle originally, he was the seventh employee at Microsoft, and he came down to Albuquerque, New Mexico, and he said, I built computers. I'm going to build business jets, little small ones. He's going to build 5-place business jets. They're going to go 400 miles an hour, go about 1,400 miles. And they said, and I'm going to build them like computers because I know computers. So he ends up building this business jet, and first one that he built didn't have a big enough engine. He had to redo the whole plane, and he built it again. And my analytics suggested that his plane was worth $2.1 million. We started selling it for less than $800,000. Now imagine you put a whole bunch of condos on the market, down there in Newport. They're worth 2 million, but all of a sudden you come on the market for $800,000. What would happen? You'd be flooded with orders. Now, this guy was flooded with orders, but since he's got a production line, he thinks he can make as many as he wants. And so he starts trying to crank them out, and he ends up losing his shirt, and he went bankrupt.
Wow.
All
Wow.
because he didn't understand what it was that he had. He had something that was worth $2 million, not $800,000. And so, the chance of him being right, using the math was less than 1%. His price being correct, he needed to go to what the prediction was. He didn't, and he lost his shirt. And so there's a bunch of things that you can do if you start understanding this process that lets you improve your odds for success. And that's what we're trying to do for people and businesses, is improve the odds for success.
And that's economics, right? I mean, and
Yeah,
this is the importance of economics. I mean, if
right.
if,
Yeah,
if we, people go into business every
right,
day not
right.
understanding economics,
Oh
and
no.
then they wonder why they are not successful in the end game, and so, I just, I want to know from you. I mean, looking at our state of the country right now and kind of the
Uh-huh.
world that we live in, America right now, uh, you know, why is it that the United States doesn't understand economics? And if you were president, what would you do differently in this economy that people are struggling in so
I'm glad you asked me that
desperately?
question, Daniel. there's some fundamental lack of understanding of how the economy works, both at the federal and the state level. So basically, we talk about in our vernacular, we talk about the law of value and demand, which basically there's just 13 words to it. It basically says that product features drive value, value pushes price, price determines quantity sold is a feature. Now, it turns out that those 13 words apply not only to these examples behind me here that relate to some markets, it also applies to the government. And so here in California, as you probably know, we've been starting to lose taxpayers.
Of course.
Especially the high-end ones. Well, why is that? Well, there's a demand curve for taxpayers.
That's it.
And what's very interesting about this demand curve, because I've studied it, is that it's in the vernacular, it's kind of flat. What the economist would call it's very elastic. And who needs to have 4 syllables when you can get 1? It's a flat curve, which means that if you increase taxes dramatically, you're going to start to lose people dramatically. Conversely, though, the other side of that is if you were to drop the taxes, you would start to draw more people to your place. And so, the conundrum for the state is that they don't seem to understand this, is that if they were to lower taxes, they would get more tax revenue. And so as we have a little saying in our company, it's only counterintuitive if you don't do the math.
Right.
If you do the math, it's like, oh, well, that's the only explanation you could have. So right now, the stock market's in a twirl, that everybody's wondering why the interest rate's high, there's inflation. There's a very underreported story that you can pick up. If you go to the St. Louis Federal Reserve Bank, or the St. Louis Fed, or also that one's known as Fred, I think. If you go to the Fred, St. Louis Fed, and you type in M1 money supply, which basically a long-winded way of saying how much money is out there. Turns out that the money supply was was rising very gradually over decades. And then in 2 quarters, it went up by 400%. That's not a typo. It went up by 4x. And then it went up a little bit more from that, and now they're starting to bring it down by unprecedented rates, but it's still about 3.5 to 4x over what it was at the beginning of 2020. And so I realized that we had a problem on our hands. We had a lot of people unemployed, but it doesn't mean just crank the printing presses up until you run out of ink. You're going to just set yourself up for what happens right now, which is this inflation that we had, because there was too many dollars chasing the goods, and so the prices had to go up. So this whole labor strike that we had, down here in Southern California, where the writers went on strike for, a couple of reasons. One is they didn't like the AI, but 2, the wages were getting depressed, and they were having a hard time keeping up because we have inflation.
Right.
The auto workers are saying we're having a hard time keeping up because there's inflation, and the teachers too. And why do we have inflation? Well, you crank the money supply up by 4x. Why aren't we talking about that? Well, it's some people have just forgotten what's part and parcel of the economic world. So it turns out there's a value and demand for money, and the more money you crank out, the lower your value gets. It turns out that.
I wanted to say that I think that there's got to be a time where, as a country, as a nation, don't we have to get to that point where we elect people that understand economics, understand the money supply, understand how interest rates work, how inflation goes up and down? It's almost like we're electing some of these people that literally, I was watching some hearing the other day. I don't know what it was, but I'm listening to some of the people that were, some of the people in Congress or in the House, and just the way that they were, the questions that they were asking. You could just tell they had no clue of what they were talking about,
Yeah.
And it's like which you can't expect the person. AOC, she's she used to be like a waitress. You know what I mean? So,
Right.
nothing wrong with being a waitress, but to go from a waitress to controlling people's money and helping to control the entire United States, or at least your district for, at the least. I mean, that's scary. That's
Oh, it's
really
very
scary
scary.
because we're dealing with people's lives. We're dealing with, I mean, the way that, I mean, it's kind of a sad day where, years ago, I was listening to a quote, or Ronald Reagan was on a Johnny Carson show, and
Mhm.
he's talking to Johnny Carson. He's like, back when we were on the farm, we were paying 50% less in taxes. I mean, 50% less.
Right.
So how do we go from, how do we get to this? How did we get to this point of massive, massive taxation? I mean, taxing on everything and thinking that this is better for the world. I mean, if I have more money in my pocket, I'm going to take more vacation. I'm going to buy
Right.
more cars. I'm going to buy more real estate. I'm going to
Right.
do more. I'm going to go out and eat more. I mean, economically speaking, how could that be bad for America?
Well, just more education in economics would be great. I mean, we require math and reading and writing, all of which are great, but we really ought to require, financial training. I mean, so many people now, I think I read that something on the order of 60% of the people in the United States can't afford an emergency $400 expenditure. Say your refrigerator goes out, or their car gets broken down. They can't afford it. Well, they haven't created enough of a cushion for themselves that they can go out and pay for that. And we need to have this education starting maybe in junior high, going up through high school and college. And then people that go to Congress, they probably need to be inured, maybe a class or two on some of the things that they're going to be having to understand in depth, that we just can't afford them to just gloss over the top of that and not understand the ramifications of this. Because
That's smart.
this whole thing about the demand for taxpayers, I mean, that's a concept that's just lost on people. There is a demand for taxpayers, which is to say that, I know a couple of wealthy friends of mine, they moved out of the state, they went to another state. Why'd they do that? Because the other state had a lower tax rate. So basically, all the states are demanding taxpayers. Every state wants to have wealthy people. And the interesting thing is that a lot of people disparage wealthy people, but the top, what is it, top 10% of the population relative to their income provides 90% of the taxes or more. So you don't want to disparage these people. You want to bring them into your state. You don't treat them like dirt. You should treat them like gold, because that's what they're
Right.
bringing. They're bringing the equivalent of gold into your state. So you
Well,
want
that's
to
it.
you want to roll out the red carpet or the gold carpet, because you want their gold to come in. And
That's it.
so the thinking on this is antediluvian. It's completely backwards. And if with just a little bit of fundamental education, people will begin to understand that we can improve this our situation a great deal. So right now we're getting all these panics in the market. The stock market's going down today because they heard this news and that news, and all of a sudden the stock that everybody agreed was here yesterday, now over the course of a week it falls to some incredible low. Well, everybody agreed it was okay here, and now it's down here. Well, why is that? Well, everybody decided to put their panic hat on. I'm going to panic because he's panicking, and so is my wife, and I want to join the panic. Well, what if you didn't join the panic? What if you actually said, you know what, I've studied this, and you guys go ahead and enjoy your panic. I'm going to just wait this stuff out and wait till everything regulates. And so one of the things that we hope will happen with our company is that we're going to start to see these oscillations. This will take years, maybe a decade or two. These oscillations in the market and valuations are going to start to dampen over time. So instead of being like this high over time, and the frequency being, a real high frequency, we think the frequency will become longer, and the amplitude will start to dampen, because people will say, you know what, you guys go panic. I'm not going to do that because I know what's going on and I've studied this, and you could too. you come to the same conclusion or very close to my conclusion if you were to study this data. But I'm not going to go ahead and panic right now because you are. And that's what we hope to be able to do for people, is to remove the panic from the system, remove the ignorance from the system, to say, hey, let's actually go out and study what we need to do and do it. And if we do that, the country will be stronger. And
Do you think though in the markets, in the trading markets, that it's starting to become, and I know this is probably along the lines of conspiracy, but have we gotten to that point where markets can be manipulated at this point? I mean, look at the
sure.
what's that guy on TV? That guy Kramer or
Kramer?
whatever,
Oh,
right?
geez.
So it's like, I mean, the guy is the biggest scam. Like
I don't know how he's
I don't even know how he's still on TV. They literally have a fund that does the opposite of what he's doing. Okay, he put out a fund, it's bankrupt, but there's a fund of doing the opposite of what he says on TV, and that fund is still going strong.
Oh, that's crazy.
How is anybody listening to this guy? So, I mean, what do you know about market manipulation, and how does that play into how
Well,
markets move up and
we
down?
we have a really good example of that with the 2008 financial crash, and basically, it was either inadvertent or on purpose fraud, which was to say that when they started to bundle these real estate packages, which basically consisted of really crummy loans, and they should have been rated, C, C minus. I don't know if they go down to D, but there was collusion or misrepresentation or misunderstanding, call it what you will, by the rating agencies, but they basically rated that many more grades higher than it should have been rated. And so
Mm-hmm.
the red flags that a lot of people like you and me, if we're investing in real estate, might have seen, had that been out there, had that been there correctly, they weren't there for people to see. So people kept investing, and you know, they there all these bad loans basically came due on these these real estate loans that were had a variable rate for a while, and then all of a sudden they get slammed with this big fixed fee. And people didn't understand that. And again, that was because of the education. Also, there was a little bit of more than a little bit of fraud going on when they were getting these things sold to them. But all that could have been avoided, I argue, if people had studied some of the stuff that we're going to bring out to people with this book. Is that what often, and there's a whole bunch of authors that want to talk about the magic of the market, the uncertainty of the investor, the problems with the entrepreneur, this, that, and the other thing. They want to make it all mysterious. Hey, there's a whole bunch of stuff that boils off to really solid relationships that you can just use. You have to dig them out. You got to do a little digging, dig here, dig there. But once you start to dig them out, oh, this thing just appears. And then you understand what the market is doing. And you say, well, I'm going to do this because the market's going to do that. And that's what we hope to be able to do for people, is to have them have the ability to point to what it is that they want to do and do it. Now, the great thing about the way the market's set up is that it doesn't mean that because one person's succeeding, another person has to lose. If you go back to the example of the anthills, I don't know if these entomologists, not to be confused with etymologists that study word, but entomologists that study bugs. I don't know if the entomologists have ever seen an outbreak of ants just going berserk because they can't find a place to live. I don't think that happens. The ants manage to work out a way. Oh, you live over there, and I'll live over here. My buddies are my 15th cousins are gonna live over there. Somehow the ants work out a way to get all their anthills in a way in which they seem to be able to get along with each other. Now, occasionally there's ant wars, just like there's human wars, but they don't make the papers. The entomologists aren't going berserk writing about ant wars. I did ant reconnaissance. What I didn't see was ant wars coming back at me. They're basically finding a place to be in their own little corner of the world. They're all happy. and they do their little ant things and they're great. Well, but people need to be able to do their people things, and be great. And they got to find their own little corner
Right.
of the world to be able to do that in. Well, it's a lot easier to do it when you got yourself a map. And we basically try to tell people, here's how you create a map for yourself. Turns out it's in a few more dimensions, but turns out you can actually work through that and get the answer pretty easily. So
What do you think is going to happen to the stock market in the next couple of years? What's your prediction?
geez, you got me there, Daniel. I would have thought that it would have stabilized by now, but I think what we're seeing is a big lagging effect. I mean, I went back and studied, talking about the currency going up by 400%, 4x. There's never been a currency rise to that extent in the history of in the history of the United States. Now, by the same token, they're reducing it by tremendous amounts over time, which is good. They did what they did. I think they realized that they might have overcooked it, to use their term, and then they're trying to, carve the turkey down or make the bird better, whatever you want to call it. So I think the market's going to be unstable for another year or more until the inflation gets roped in. Because right now, people don't know where to put their money. The stock market used to be a really good bet when there was low inflation, and now inflation's high. So where do you put your money? Well, people don't know, and
Right.
so it's confusing. It's confusing to the market, and it's confusing. So basically, the Fed has got enormous power over what's going to happen here going forward, and the Fed doesn't really have to answer to John Q. Public. They just do what they
Right.
do, and we bear the outcome of these results. Usually, they get it pretty close to right, but I think that they probably would admit that they didn't get it exactly right in early 2000 when they took the money supply up that high. So that can be a problem for people. I think it's a problem for the market.
And when you analyze a market or you analyze a stock, what are some of the processes that you go through?
Well, I can't give you all the secret sauce, but we like it when stocks are making money. So we might take out the ones that aren't making money. So our little process, since we don't look at startups, our process won't catch a Facebook in its inception. It won't catch Apple as it starts out. It won't catch the next big thing, because it's waiting to see how companies perform. What we're doing is we're doing what happened in Moneyball. We're looking at players that are
Right.
out there. They kind of look a little crazy to the average scout. They say, oh, he's too heavy. Oh, this guy's old. His arm strength is down. Of course, he's an outfielder so as they said in Moneyball, we don't really care what his outfielding skills are. We want to be on base.
Right.
So we kind of
Give me,
look
give
for
me
things
the
like
on base
that.
average. Give me the on base average,
yeah.
man.
And so we're looking for, what does a company make money? It does. Well, what's its PE ratio? Oh, it's low. Well, those are two markers right off the bat. It's got a high return on assets or high return on equity. It's getting dividends. It's doing this. It's doing that. The debt to equity ratio is low. I mean, you can take in software can take in literally hundreds of variables. We're going to probably expand to take in thousands as we go forward. But
It's awesome.
just with a simple, quick pass, you can figure out the things that are undervalued, and that's what we look for: is things that are undervalued, and try to buy those things. And it's basically a bunch of traditional benchmarks that you would probably recognize. But the secret sauce can't tell you exactly how we do that. I can tell you we can take several passes through it too. So some company might show up here, but not here. And another company might show up here, but not here. But when a company shows up with several passes in what they call an ensemble method, where you test it and you test it, you test it, you test it.
Right.
You might want to point towards that company and then look at that company and say, well, why is that undervalued? Maybe we do look at things like, is it being sued? Did their CEO leave? Has a new competitor come up with a vastly new product that they're getting the market doesn't like how they look now. Say it was like BlackBerry as Apple launches the
Right.
iPhone. BlackBerry probably looked pretty good, would look good to somebody like us, and then the iPhone comes along. You have to have some sort of allowance to be able to say, well, the technology just changed, and so we're
Right.
going to be left behind. That's harder to predict, but what we're trying to do is to get the things that fall into the pretty stable conditions more often and try to go for those people and then those companies and invest in them.
So a lot of people are talking about maybe another pandemic next year. I mean, have you heard anything about that, and how will that play into your strategy? Or I mean, how would you do things differently, or would you do things the same as you did in the last pandemic?
Well, interestingly, our fund had its best year in 2020 when the pandemic hit. So our fund is actually geared to finding stuff that becomes completely undervalued when people start to drop stocks. And so if the stock market falls and we have the latitude to swap out into new stocks, we have the way to go forward with that. But the stocks we're holding right now are, by our analyses, are all undervalued. That's the reason we bought them in the first place. So we've lost as other people have lost, but what we did prior to getting this fund together is we did thousands of back tests. We did them in up markets. And in up markets, we would typically do better than these competing funds, and then we did them in down markets, and we wouldn't do as poorly in down markets. And then so when we did all these tests, up and down and up and down and up and down, we said, well, it looks like it's working. Let's just go ahead and pull the trigger. So we pulled the trigger, pushed the money in, and 3.5 years later, it seems to be valid. So, it's not what the absolute highest hedge funds are getting right now, but it's a very conservative fund. It's only going long. There's no shorts in it. There are no options in it, although we're not against options. There's no currency dealings. There's no pork belly futures. There's no commodities in it. It's just S&P 500 stocks right now. And so we may change that going forward, probably will, but right now that's a pretty safe bond, and that's the one we use. So
talk about failure. When have you had failure? What's been one of your failures in your life, and how did you deal with it? How did you overcome it?
Okay, well, personally or with respect to the business?
Your whole life, man. We talk about everything here, man. Absolutely.
Well, there's an interesting phenomenon in medicine called organ failure. And I had, when I was 17, I basically, when I took the Army physical, I discovered my kidneys weren't working right.
Wow.
And I got a name for this condition. And, I just said, well, I said, I didn't have a degree in medicine at 17, but I said, I know the kidneys are part of the excretory system, and my kidneys need help. So I just said, I'm going to start running. Like Forrest Gump said, I just started running. So I started running ran up to 50 miles a week for 5 years, and 40 miles a week for a decade or two, and then 30 for most of the rest. I still run. I just ran this morning. I've been running for 50 years. And I had one transplant I made it till went from 17 to 38 without having to get on dialysis. And then I got a kidney, and then that failed. It was a cadaveric kidney. It didn't work right. And then as my first kidney is failing, a bunch of friends offered theirs, my daughter included. My best friend, Tim's right here in my front pocket. Tim Schreiner gave me a kidney and saved my life.
Wow.
It was phenomenal. And, so now interestingly, as I was getting the kidney, I'm in the waiting room ready to get rolled into the operating room. I met a woman who was 21, and she had gotten the same diagnosis I did. And she went from diagnosis to being on dialysis in 6 months. And it took me 21.5 years.
Oh.
So I think all that running kind of helped out the process there for a while, pushed everything back.
Well,
And now,
I just love, sorry to interrupt you, but I
yeah,
just love how you talked about how, like, let's be honest, right? I mean, somebody has a life-threatening issue or challenge medically or whatever it is, could be business,
right.
could be life, divorce, you name it.
Hmm.
And usually people just shut down. They go the opposite direction. And what I love about Wealth on the Beach podcast is the fact that I've done, I don't know, probably close to 250 episodes so
Hmm.
far. And I've interviewed the best of the best, you name it. And there's just a very common theme. And this is what I love about it. It's almost like when Dale Carnegie wrote about, or when Napoleon Hill talked about all the greats, right, in Think and Grow Rich,
Uh-huh.
and it was very very similar common ideas, and all these common ideas are connected, and they most of them come together saying when you have failure, you pick yourself up and then you just start running. You just kind of just keep moving forward
Yeah.
versus all of the people that I've ever known that are, in life struggling, failures, difficulties, challenges, illnesses, always going through something. They're always giving up all the time. They're always just laying down and giving up on possibilities. I love that you're talking about that, because I just hope people recognize that when shit hits the fan, you got to put the pedal to the metal and get to that next level, whatever way. And your way was just, all right, I'm gonna go running. I'm gonna run. I'm gonna heal myself, and that's what you did.
Yeah, I did
And
that.
so, God bless you for that, man. That's awesome.
Well, back to your point, you get hit with this when you're a kid, and you could say, why me? Oh, why me? Well, shit happens.
Yeah, yeah.
It just, it happens, and you just say, okay, what next? And so I just, as I said, I started running then, and finally got this kidney. In fact, getting the kidneys, it turned out that what happened over these, for 3 decades, my body was filling full of poison. And so at the end of 17, I got the diagnosis. 47, I got the kidney. All of a sudden, my brain cleared up, and that's what enabled me to figure out how to do this four-dimensional system. And
Awesome. It's awesome.
so I've been working on that for the last 12 years, and now the book and the company. That's the offshoot of that. By the way,
Chad,
my kidney's 21 now, so it can drink. So.
wow, I love it. I love it. ChatGPT, man. How is technology and AI going to change the future, man?
Oh yeah, well, there's a lot of people that are, rightfully afraid of what this means to, say, like the writing community here in Southern California, where you and I live. And
Right.
I had a guy on my team say, "Hey, we should put your book through ChatGPT." I go, I don't want you to do that. I'm going to get ripped off soon enough when the book comes out. The
Right, of
last thing you want
course.
to do is put it out in the ether. I think it's going to make on the plus side, we've used it to help craft messages for contacts. And so, what's been great is we gave this thing 121 contacts off of LinkedIn. We told them a little bit about us, and then we gave them some stuff about them. And I'll be good, it gave 3 potential greetings to each one of these people, and we pushed that out. We already got some stuff back, so
Awesome.
it works there. It can
Sweet.
craft some really good messages. So there's a plus to it. But on the other side, it could cost people their livelihoods, writers.
Yeah.
In fact, it's going to probably figure out how to code. I mean, there's going to be, we already have
Well, it's already
yeah,
coding already. I mean, so
right,
the coders are dead. The writers are going to be dead. I mean, let's just be honest.
right,
I mean, this is progress that won't stop. This is the
right,
automobile versus the horse.
right,
And whether we believe it's a good thing or a bad thing, we couldn't stop it even if we tried. Now, do I believe that writers should be protected on their own content? And obviously, if they're being ripped off and that kind of stuff, that's not necessarily the right thing, because everything is already on the internet. So I mean, just even not even ChatGPT, but another app called Perplexity. It's because the challenge with ChatGPT, it's only good till like September 21 or something like that. Like the information is only updated until September 2021. So ChatGPT is not up to date at all. Their database is like a library. It's like an encyclopedia, and it's just that was written, and whatever's in there is in there as of right now. But there's another app called Perplexity, and I'm sure there's many others. But this app is actually connected to the internet. So it'll get you the information that's real time right now. Like what does it know today in real time? And it also connects you with all kinds of websites and links and all this kind of stuff. Look, I think that AI is revolutionary. It's absolutely incredible for so many different things. I mean, let's be honest. I mean, even even trading in the trading world. I'm working with a guy right now that he hasn't launched. Well, he's launched it, but they're doing some platform changes, so it's not completely up and running right now for me. But they're auto trading, and it's literally just they're doing thousands, hundreds of trades every day, and they're just getting in and out and in and out, in and out. Just an auto trade system and they're bringing some pretty decent returns. I mean, much, much higher than the S&P 500. So, and again, I'm a mutual fund guy. I mean, I sold mutual funds. I've been selling mutual funds for, 25 years. So I'm the guy that says, hey, get in there for the long run and just, invest forever, And so, and again, in each, I mean, there's different reasons to do both. I mean, there's, obviously I have my long-term investments, but I also have my speculative stuff. And of course, I love the fact that there's going to be a time, because I do trade options and I do trade stocks, but there's going to be a time, I'm very, very excited of a time where I can just put it on autopilot and allow it to trade for me through algorithms, through AI algorithms. I mean, this is like a new future, a new wave. Again, pros and cons to everything. But when you're talking about freedom and choices and options, which is everything that I'm interested in. So the AI is like, well, and the other thing too is, let's be honest here, right? I mean, the other thing, it sucks. It sucks for writers. There's no question. It sucks for writers because they're like even like a speechwriter. I was telling somebody the other day, and they're like, well, I don't want it to write for me. And I'm thinking, well, wait a minute. Everybody wants to be original. Everybody wants to be authentic. Everybody wants to be themselves and all that kind of stuff. But remember, in AI, if I put into ChatGPT what I want it to write for me, if I prompt it correctly based on my thoughts, based on my ideas, based on what I believe, based on my character, based on, even citing referencing things that I've wrote or whatever, it crafts it in a way that is well said, well thought out, based on me, based on my idea. Matter of fact, when I prompt it, a lot of times I'll say, write in the style of author Daniel Alonzo. Doesn't know me so well yet because I wrote my book after September 2021. So, but as time goes on, it's really starting to get to know me as literally a colleague would get to know you. But this is what I was going to say, is that if a president or somebody has a speech writer, this is what a speech writer does. Speech writer understands what the message that the president's trying to give to the world. And then they craft a message based on, so the president doesn't sit there and write all his own speeches, right? He's got speech writers. Right. So in this new world, Doug, me and you that might not have the budget to have speech writers for us all day long, right? That we have on payroll all day long, that all they do is they write for us. and craft speeches for us and craft ideas and craft content ideas or letters to our potential clients or whatever. We don't have people like that. So ChatGPT has become the modern day speech writer for the masses.
Oh, sure, sure.
And I think that's a huge benefit to the masses. Now, the speechwriters, the really great speechwriters, what they're going to have to do is they're going to have to adapt. And they're going to have to say, okay, now I got to become an amazing writer. I got to hook up with really people that can afford me in certain situations where they want somebody to give me personalized attention, customize everything in a way that, you know, I can come out way more valuable than than a chat GBT and that type of situation. So I don't know, what are your thoughts on any of that?
Oh, well, that's all. I hadn't thought all the way through as you just did, but I remember I had a friend of mine that's really high on chat GPT. He's my auto mechanic, and so I went over to his place, and he's got his guys working on my car, and he said, "Oh, you really got to try this stuff. Here, go over here, put a sentence in." So it's his machine. I figure, well,
Right.
I'll put a sentence in that's part of what I might have done. In my case, I've written, I've written back to, the early 2010s. So I put something, what does value to what does price mean in cars? If I say price equals horsepower, and then I gave it a little formula.
Yeah.
And I hit enter, and it basically came back with a sentence that I probably wrote about 2012.
Isn't that wild? I mean, it's absolutely wild.
It went out and found some. I mean, I don't know if it was exactly what I wrote 10 years before, but it was awfully close. And so,
and it was probably you. It was probably you. I mean, it has the information. And if you would have wrote your name, I mean, you should try this. I mean, just write in your name and say, tell me about Doug and about his thoughts and his philosophies and what he believes in. And if you have, I know you've written like 13 peer-reviewed articles, and so it'll find your stuff out there, and it will start to get to know you and start using it just as your assistant would. I mean, I ask it, if I had a little red button that, I have, 20 assistants and I'm paying them all $50,000 a year, and they're just waiting for me. They're just waiting for me to ask them questions or write something for me or whatever. Oh, wow. We just got like a thing of where wow, that's interesting. I'm going to pause. Anyways.
Okay, it just started back up is what I heard.
I
have a funny story for a friend of mine. I have a friend of mine that a guy named Dr. Paul Bevilacqua. He invented the lift fan device that works on the F-35 fighter that lets it basically take off vertically. And so he's writing a book, and he decided to let ChatGPT take off with it for a bit. So what he did was he didn't give it very much instruction, and it basically, he just gave it a little bit of something to go with, and it came up with this whole storyline about how the program started, and it went really well for a while, and all of a sudden they had all these problems, and then it made up stuff. It basically said that a couple of pilots died in flight tests. They didn't. And that the program went awry, and it was funny because it made up it was like it was pretending that it was a sci-fi writer and just basically came up with a sci-fi ending. And all this information is available. Nothing up to that point. You said up to 2021. It's all out. It didn't happen, and it basically invented something. So there's a side of it, depending on how you input the data, that'll just craft something that didn't happen.
Well, this is the importance of making sure you're reading and researching and all that. Absolutely.
Yeah, like one of the little phrases we have here, AI is good, but we're concentrating a little bit more on the I rather than the A right here.
Yeah. Well, good for you. Good for you, Doug. I mean, Hey, look, this has been so interesting and fun, and we went all kinds of different directions. And thank you so
All right.
much for
Well, thank you
hanging
for
with
having me,
me.
Daniel. I really
No,
enjoyed this.
I love it. I love it. I love it. And really, I want everybody to get to know you. So I'm sure you're on Instagram and LinkedIn and all these different places. So give us a little idea how to get a hold of you, because there's going to be people right now that are watching, listening, that
Sure.
they're like, I want to reach out to Doug. I want to talk to this guy. He sounds interesting and he knows his shit for sure. And I want to hang out with this guy, So
Sure.
tell us about how we can connect with Doug.
Yeah, you can reach me by email at dhowarth, that's DHOWARTH at hypernomics.com. That's HYPERNOMICS.com. You can find me at LinkedIn at Doug Howarth, and also my personal website, doughowarth.com, and then the company website, which is www.hypernomics.com. And we have the usual Instagram stuff too. We don't work with Instagram and Twitter as much as we should, but we're very heavy into LinkedIn, and we're starting to do a bunch of YouTube we back post some of the stuff that you would do and some of the stuff we did, and then we cross reference to you so that we can pump up your viewership and ours too. So but yeah, and if you call me, I'll pick up and we'll talk. So
yeah, there's a lot of people that they're going to DM you on LinkedIn, or they'll reach out through your email or whatever, and they're going to say, "Hey, what's going on, Doug? I saw you on Wealth on the Beach podcast, and hello, and thank you for the value, thank you for the insight, thank you for the thoughts, and we're gonna keep following you, man. We're gonna keep rooting for you all the way, and I wish you the best, man. And I hope if you're ever down in Newport Beach, man, call me up. And you have my number, so we connected. So call me, text me anytime, and let's get together for dinner, lunch, coffee, you name it, man. All right.
Fabulous. Thank you so much. Appreciate it.
All right. And everybody, just as always, everybody, just make sure you continue. Thank you. Well, first of all, thank you for being with us today, but continue to dream bigger than ever. Get after it, but most importantly, do it now. God bless you. We'll see you at the top.